Money makes the world go round, and banks are at the center of it all. But what happens when things go wrong?
More growing concerns, these about the banking industries.
1 week after Silicon Valley Bank collapsed,
The bank has been seized by state and federal regulators.
We do some breaking news.
Those responsible can be held accountable.
it's the biggest bank failure since the
All our money
2008
is in the
financial
bank.
crisis.
I don't know how we're going to do our payroll. I don't know what we're going
And I said, you're not hearing me. Get the money out.
Imagine waking up one day to find out the bank you bank with has collapsed and all your savings are gone. This nightmare scenario has played out in countries all around the world. Banks are required to keep a certain amount of depositors' money as a reserve. This helps to ensure that there's enough cash on hand to meet the needs of the depositors. But this is where things get interesting. The minimum reserve amount in South Africa is only 2.5%, which means if you deposit money in your bank account, your bank only needs to reserve 2.5% of this. This means they can lend this money out to someone else. Let's suggest you deposit 100,000 Rand in Bank A. Bank A can now lend 100,000 Rand minus 2.5%, which is 97,500 Rand to someone else. That person can now deposit 97,500 Rand in, for example, Bank B. Bank B does the same, and this goes on until 100,000 Rand turns into just under 4 million Rand in circulation. Now, the banking system works well if everyone stays calm. And the reason for this is that banks borrow money short term and generally lend it out long term. This is how they make money. When you deposit money in a bank account, they lend it out and earn interest. And in return, they share some of this interest with you. But if a rumor would get around that a bank is running into trouble, a suspected shortage can lead to an actual shortage. Can you remember when COVID just broke out? There was this crazy rumor that toilet paper is going to run out. I know this sounds ridiculous, but it really happened where I stay. People flocked to the supermarket to buy all the toilet paper they could get their hands on. Now, whether this rumor was true or not, the fact of the matter is that the supermarket was going to run out of toilet paper before the wholesaler could send more. And this is exactly what happened to Silicon Valley Bank when people panicked and ran to withdraw all their money. Banks often invest money into bonds. Now, bonds are generally a safe investment, promising to pay the investor a fixed interest over time, and at the end, they give their money back. In return, they only require that the investment is fixed for a specific term. As soon as interest rates rise, more attractive bonds will come into the market. Now, this doesn't mean that there's something wrong with the old bonds. The bank will still receive their fixed interest payments and their money back after the term. The issue is when they want access to the money before the term ends. Now, banks can sell these bonds prematurely on the secondary market, but if they do this at the wrong time, they could suffer a loss. The current bonds that the bank hold offers a lower interest rate than the new bonds now available. So if they want to sell them, they have to do this at a discounted rate to make it worthwhile for the investor. Otherwise, the investor can just go out and buy a new bond with better returns. When clients of Silicon Valley Bank wanted to withdraw their money, the bank didn't have it. A lot of it was fixed in bonds. The bank was forced to sell these bonds at the wrong time, leading to a massive loss for the bank and more panic withdrawals, which led to the ultimate collapse. The big question is, can this happen to South African banks? The answer is yes, and that's quite scary. When I did my research on this video, it just made me realize how fragile and interconnected the financial sector really is. A collapse of one big bank could lead to another soon thereafter. I was also shocked about the amount of money that can be created by banks on a single deposit. However, there is hope. The Financial Sector Law Amendment Bill was presented to Parliament, and in 2001 it was signed into law. The goal of this bill is to eliminate the risk for depositors being able to lose their money when a bank goes bust. This is set to future-proof the banking sector of South Africa and is also set to be fully functional in the first quarter of 2024. This gives me hope, as regulators are seeing the cracks and filling them before this nightmare can become a reality. Now, if you've reached this point in the video, you probably found it slightly interesting. So don't forget to smash that like button and help me reach my goal of 5,000 subscribers this year.